Imagine waking up tomorrow morning, opening your banking app, and seeing this message. Your account has been temporarily restricted. No warning, no explanation. Your money is there, but it's untouchable. Now here's the part most people don't realize until it's too late. Your bank didn't freeze your account because of something you did yesterday. They froze it because of how your account suddenly looked to a system that doesn't know you at all. And if you react the wrong way in the next 72 hours, that temporary freeze can quietly turn into a months-long nightmare. Let me explain how this actually works. From the customer side, account freezes feel personal. From the bank side, they're not personal at all. Banks don't think in stories, they think in patterns, risk scores, and probability. Your account is constantly being compared to your own past behavior, millions of other accounts, and known fraud and compliance models. When your activity suddenly stops matching your historical fingerprint, the system doesn't ask questions, it acts. And here's the uncomfortable truth. Banks are legally and financially incentivized to freeze first and explain later. If they hesitate and something turns out to be wrong, the bank eats the liability, not you. So freezes aren't customer service decisions, they're risk containment decisions. Now let's slow this down, because this is where most people misunderstand what's happening. There are three completely different freezes, and treating them the same is a mistake. Number 1, fraud freeze. A fraud freeze happens when your behavior suddenly breaks character. Not illegal behavior, different behavior. Examples: you normally move small amounts, then suddenly move a large one. You transact locally, then suddenly internationally. Your device, location, or timing changes sharply. The system asks one question: is this still the same person? Fraud freezes are usually reversible, but only if you respond cleanly. Number 2, compliance or AML freeze. This one scares people because it feels accusatory even when it isn't. Compliance freezes happen when the bank can't confidently explain where money came from, why it moved the way it did, or whether it matches your account profile. This is where documentation matters more than emotion. And here's what most people don't understand. Compliance teams are not customer-facing. They don't care how frustrated you are. They care whether your explanation fits the transaction trail. If it doesn't, the clock resets. Number 3, legal hold. A legal hold is the only freeze where the bank truly has zero power. Court orders, government instructions, regulatory actions. In these cases, the bank is a messenger, not a decision maker. No escalation works here because there is nothing to escalate to. Let's talk about what actually triggers an account freeze, not in vague terms, but in the way banks and compliance systems see it. Trigger number 1, a sudden change in transaction rhythm. Banks don't just look at how much money moves, they look at how it moves. If your account usually has steady, predictable activity and then suddenly shows sharp spikes or rapid movement, the system treats that as a potential takeover or misuse. The logic is simple. Legitimate users are consistent. Compromised accounts are chaotic. That shift alone can be enough to pause an account. Trigger number 2, money arriving without a clear behavioral explanation. This is where people get confused. It's not about the money being bad, it's about the bank being unable to explain it using your past behavior. If your account has never received that type of deposit from that source in that pattern, the system flags it because it breaks your historical profile. Banks are required to understand money flows. When they can't, they freeze first and ask later. Trigger number 3, counterparty risk, who you're transacting with. Your account doesn't exist in isolation. If money moves between your account and another account that's already under review, restricted, or high risk, that risk transfers to you instantly. You didn't do anything wrong, but the system sees proximity to uncertainty, and uncertainty freezes accounts. Trigger number 4, geographic or access inconsistency. Banks track where and how accounts are accessed. When logins, devices, IP locations, or transaction routing suddenly change, especially across borders, the system treats it as a possible account compromise. It's not about travel, it's about sudden, unexplained changes without a behavioral bridge. Trigger number 5, outdated identity data combined with new activity. Old or incomplete KYC information often sits quietly for years, but when activity increases or changes and the bank can't confidently match it to updated identity data, the account becomes legally risky to operate. At that point, freezing the account is safer than allowing it to continue. These triggers don't mean guilt, they mean the system lost confidence, and when confidence drops, access disappears. This is the part almost nobody gets right, and it's where people accidentally turn a short freeze into a long one. The moment your account is frozen, your situation stops being a conversation and starts being a record. Every phone call, every message, every explanation you give, all of it is logged. Not just what you say, but how consistently you say it. So when people panic and start calling over and over, they think they're helping. What they're actually doing is creating more material for review. And here's where it goes wrong. On the first call, you explain the transaction one way. On the second call, you explain it slightly differently. On the third call, you add details you forgot to mention earlier. From your perspective, you're clarifying. From the bank's perspective, you're changing the story. Frontline bank agents don't unfreeze accounts. They don't make decisions. They don't override systems. Their job is to document what you say and pass it forward. So every new call doesn't move your case faster, it adds another version of your explanation into the file. And when that file reaches compliance or risk teams, inconsistency is the biggest red flag they see. Here's the counterintuitive part. Compliance teams don't want emotion, they don't want urgency, they don't want long explanations. They want a clean narrative that matches the transaction trail. That's why someone who calls once, submits clear documents, and then stays quiet often gets resolved faster than someone who calls 10 times trying to fix things. Silence with clean documents beats noise with weak explanations, every time. Let's talk about timelines, because this is where expectations get people into trouble. When an account is frozen, the first question everyone asks is, how long is this going to take? The honest answer is, it depends on why the account was frozen, not how urgent it feels to you. Fraud-related freezes are usually the fastest. That's because fraud teams are trying to answer a very specific question. Is this account still controlled by the legitimate owner? Once they can confidently answer that, the freeze can be lifted. That's why fraud reviews often take days, sometimes a couple of weeks, but not much longer, as long as the response is clear and consistent. Compliance freezes work very differently. These aren't about confirming identity. They're about explaining money flows in a way that satisfies regulatory requirements. Every document submitted has to be reviewed, matched transactions, and sometimes escalated internally. If anything doesn't line up, the review doesn't move forward. It loops. That's why compliance freezes commonly stretch into weeks or even months, not because someone is dragging their feet, but because the bank can't close the file until the explanation fully makes sense. Legal holds are the most misunderstood. When a freeze comes from a court order or government instruction, the bank is no longer in control of the timeline. They're waiting on someone else's decision, and no amount of calling, escalating, or complaining speeds that up, because the bank legally can't act until they're told to. There is no rush button for account freezes. Every incomplete response, every unclear document, every contradiction quietly extends the review window. The fastest resolution almost always comes from patience, clarity, and letting the process finish cleanly. At this point, most people want a trick, a shortcut, a magic phrase, something they can say to make the freeze disappear. The truth is, what actually works is boring, but it's effective. The single most important thing you can do is respond once and respond clearly. Banks don't reward volume, they reward coherence. When you submit documents or explanations, the goal isn't to tell your story, it's to make the transaction trail make sense on paper. Every document you send is compared directly against specific transactions, amounts, dates, sources, destinations. If your explanation doesn't line up cleanly with what the system already sees, the review stalls. Not because the bank disagrees with you, but because they can't close the case. This is where people hurt themselves without realizing it. They speculate, they over-explain, they add context that feels helpful but isn't provable, and suddenly the file becomes harder to approve, not easier. Compliance teams don't want narratives, they want alignment. Another mistake people make is escalating too early. Escalation doesn't speed up a review that isn't complete. In fact, it often slows it down because now multiple teams have to touch the same file, reread it, and confirm nothing was missed. That adds friction, not urgency. The fastest resolutions almost always come from the same pattern. One clear response, documents that match the activity, no contradictions, and patience while the review finishes. Banks don't move faster because you push harder. They move faster when everything finally makes sense. If this helped you understand how the system really works, make sure you like this video and subscribe to Cashfish. Turn on notifications so you don't miss the next breakdown. And if you know someone dealing with a freeze right now, share this with them. Clarity is power, and my goal is to keep bringing it to you clearly, without the noise. I'll see you soon in the next one.